It's never really too early to start talking to your kids about the importance of being careful with your money and establishing a good credit habit. It's crucial for young adults to establish their credit history early so that they can access better insurance rates, enjoy a smoother experience renting an apartment, and eventually have an easier time applying for mortgages and other types of loans. Now, the minimum age to get a credit card and establish a credit score is 18 years old, but there is still a lot that parents can do to help their children prepare for this milestone. After all, it is still possible to build credit as a minor. If your child, for example, is already a young adult who is ready to start building their credit with a credit card, there are a few simple tricks you can teach them about maintaining excellent credit. For example, always pay your bill on time, spend below your means, and don't open more accounts than you can comfortably manage. It's not only about knowing how the credit card game works, but also to be educated, and the earlier the better. According to some researches, children actually start developing their behaviors around money as early as the age of 3, and those behaviors and thoughts are pretty much solidified by the age of 7. Something to consider is developing good money habits, and it can be as simple as giving your children household chores to help them understand the concept of earning money. You can also use stories to teach your kids about good money habits, and really there's a bunch of them available, so just pick up a couple of books, read it yourself, and if it's good enough and you believe that it'll be a good lesson for your kid, then just read that to them as a nighttime story. Overall, presenting these kind of stories and narratives from a colorful point of view might be a little bit more effective than just telling your children no at the checkout counter. And presenting these kind of stories might just help with making them invested in solving problems for the characters that they come to love. You also want to teach your children about the difference between debit cards and credit cards, because when your child is young, they will observe you swiping your card at the checkout and they will easily make a connection that the card is a lot like cash. But while debit cards is essentially like cash, credit cards is borrowed money, so before your child starts using their own debit cards, they should definitely understand the difference. And having a debit card does not help you build your credit, but the habits formed from responsible debit card usage translates to more complex topics like credit cards and borrowing. A number of banks do offer debit cards that are designated specifically for kids and teenagers. You can open up a Chase First banking account under your existing checking account and get a debit card for kids between the ages of 6 and 17. By the way, I just want to preface that I don't think you should be getting your 6-year-old a debit card, but the option is there. Anyways, another thing that you can do is add your child as an authorized user. Now, adding your child as an authorized user is a great way to help them build their credit before they turn 18, and a child generally only needs to be between the ages of 13 and 15 years old to qualify as an authorized user and start building their credit. And some credit card issuers may have no credit restrictions. You should check with your individual credit card company. Before adding your child to your card, call your card issuer to confirm that their activities will be reported to the credit bureaus. Otherwise, it'll have no benefit in helping them establish their credit history. Once they are on your account as an authorized user, they can use your card independently for purchases online or while they're out on their own, out about. As an authorized user, they basically gain the same accesses as the primary card holder, but certain credit card companies will offer you incentives like not charging additional fees to authorized users. So again, that's something that you want to personally look into and just figure out what you're doing with your child and how. And if that is a route that you're gonna take, then I would encourage you to not stop there, but also every single month have a sit down with your child and walk through their billing statements, talk to them about what it means to repay, what happens if you carry balances over, how interest is calculated, what future consequences are if you don't pay that bill on time, and how that impacts your credit and how that'll affect you in the long run. All these things are a great lesson at that time to talk to your child about, and every single month as you're doing that, you're basically just reiterating and strengthening the things that you want them to understand in the long run. And one of the best ways that any individual can build credit, now this could be for a minor, this could be for a young adult, this could even be for somebody who's in their mid to late 30s or early 40s, whatever the case may be. If you, let's say, don't have any kind of credit history or score whatsoever, the best thing that you could probably do for yourself, and this is something that I did for myself, and that's to open up a secure credit card. The way I did that is I went to a local Capital One. I'm pretty sure you can go to any of the banks and just have a discussion with them, talk to them, figure out how to open up a secure credit card. What I had to do is deposit deposit about $50. They gave me a card limit with $100, and then I used that for several months. After that, they increased my card limit to about $250. I continued to use that and slowly got my credit score up. At that point, I was offered more credit cards. Now, this is the very important thing, is that when you start building your credit, you're going to get offered a lot of credit cards in the beginning. I would encourage you to not jump on the first one. Wait until you get a good credit deal, and the way that you get those deals is by reading through those papers. You want to look at the APR, you want to look at the rewards, you want to look at everything that's going to benefit you from that credit card company and what you're getting from them, so that way you continue doing business with them. You got to be smart about those decisions because they're going to affect you in the long run. And obviously with credit cards, the longer you have them in your history, the better it is for your credit score. Ultimately, the history of your credit card is about 15% of your credit score, and that's why I encourage you guys, and that's why I'm making this video, is to encourage y'all to get started early on. Because yeah, if a kid is starting to build their credit history at the age of 15, 16, 17, they're gonna have a huge leg up on somebody who's starting at 18. And speaking of not waiting too long, there are a lot of things that you could take benefit of just getting it started earlier rather than later. Make sure you guys are investing in yourself and this channel by subscribing down below right now. Because here in Company Comprehension, we talk about all things business, personal finance, growth, wealth, health, and all things to help better your life every single day.